stocks in 2015. I want to bring in Glenmede, Director of Investment Strategy, Jason Pride, right now. And on the telephone with us is Altaira Capital Managing Partner, Ralph Acampora. Ralph, you are one of the leading technicians out there. And yesterday, you and I were talking on email. You said we've seen an important break here, suggesting a bear market. Tell us what you see, Ralph.
Good morning, Maria. Yes, yesterday, for the oldest theory in technical analysis, Dow's theory, this man in his simplicity was a bloody genius. And what he did over the years, I think starting in like 1895, started talking about two important indices that he created. The industrials, which make products, and the transportation index, and in his day it was called the railroad average, that shipped the products. And he said they were mutually independent parts of the economy. By the way, Dow theory is not a short-term indicator, it's long-term. And the transportation average peaked, made its closing high on December 29th, 2014. It was 5 months later that Dow Industrials peaked on May 19th, 2015. And for all of 2015, if you were looking at Dow theory, it was saying that the market was in a secondary correction. And most of the averages, like the Dow Industrials and the S&P 500, were flat this year. So on that label alone, it was correct. However, yesterday, when the Dow Industrials broke down, it took out the Dow Industrials major low, and that was created in December, on December 16, 2014, and that closing low was 17,068.87.
Right.
By virtue of the fact that we closed below it, it flashed what Dow would call a primary bear market signal.
So are you saying that there are more losses to come?
Absolutely. We're down only about 7% now from peak to where we closed last night.
Right.
And theoretically, the market is probably close to a near-term low because we're going to get washed out in the next day or so.
Okay.
But any rally from this level is an opportunity to sell.
Is an opportunity to buy, you said?
No, sell.
An opportunity to sell.
No, this is a primary bear market.
A primary bear market. Jason,
Yes.
do you agree with that?
No, not necessarily. Look, technical analysis can tell you a lot of different things. And I think it's quite appropriate that you're hearing that viewpoint because that's part of the thought process that goes on Wall Street. But at the same time, you look at the backdrop here. This is yet another excuse for a correction. China being an excuse this time. We saw a correction with Greece, and we've had other events like this. But in the meantime, one of the things that's going on is there is a longer-term economic expansion in place. Everybody's pointing to the Chinese PMIs today, but when you look at the other PMIs, when you look at what the U.S. has been reporting, when you look at what's been reporting in Europe and what's been reporting in Japan, all of those are pushing higher than they were previous months in July. So there's an ongoing economic expansion in place here, but there are issues along the way. Growth is not extremely strong. We are in a fairly protracted expansion. We still haven't really seen the growth that we normally see during an expansion.
Right.
So there are definitely some question marks here along the way, but nevertheless, we still think we're in that longer-term expansion, and valuations at least are somewhat reasonable. The excesses in the systems is not there, either from a marketplace standpoint or from an economic standpoint, to bring about a longer-term correction. I understand the technicals. I hear that. But that's not all of the story, so I think investors really need to be careful to take into account the full picture.
This is a really important point that you're making, Jason, because you're looking at the fundamental story. And the fundamental story long-term seems to be improving. Ralph Acampora, you're looking at the technical story, but technically speaking, you say any opportunity where you see gains, you've got to sell into it.
Maria, can I respond to that gentleman just spoke? First of all, markets, whether it's our market or anybody else's market, are leading economic indicators. Please, for heaven's sakes, look at the charts of the DAX. Look at the charts of the emerging markets. They look like a disaster, and they're just beginning to break down, just like the Dow did. So I'm a market observer, and the market is telling me there's a problem with the economy globally. I'm not a fundamentalist, but be careful.
Yeah, I think that's a good point. You want to weigh in
Look,
here? Go ahead. Go ahead,
I
Jason.
agree here with Ralph. I mean, he's got a point that you have to look at the markets. That's part of the story. You have to take that into account. You have to bring that into your analysis. But to look at that alone tends to be a mistake. You need to take into account the full picture. Quite often people have gotten themselves into a trap by looking at that alone. We incorporate that into the process. We're looking at the full picture. I recognize that we may see some weakness on the near term that may come about for the markets, and you watch how the economy and the overall system responds to that to tell you the rest of the story.
Yeah.
This is Kevin from Recon. Going over to Europe, and when we're talking about the DAX, people should actually look at the top constituent, which is Bayer. And when Bayer reported earnings, their EBITDA went up 33%, and they're up over 20% for the year. So it's actually carrying it. And they're a great healthcare company, and they've got a great long-term thesis as we have aging societies, especially in Europe. So people need to start digging down deeper, and they can pick and choose good names. So overall, selling the general markets, maybe, but you can find great value here, especially when you start digging down deeper. And the DAX trades at less than a 14 PE and has a 3% yield. Compared to the U.S., that seems like a good value.
Can we say that some of these high growth names that were wildly overvalued, they maybe deserve to get taken to the woodshed? Look at Netflix. How can you justify the valuation on a company like that, the weakness in biotech? The DAX is down 16% since its April high.
And that's what Ralph was talking about.
That's nearing. So a lot of these names, like the danger is to try and catch those energy stocks because they keep tumbling. And now, as Cheryl pointed out last hour, I think 85–90% of the energy stocks in the S&P 500 are now in bear market territory.
And the big drag on the DAX is actually the automobile manufacturer. So, I mean, it's BMW, it's Daimler, it's Volkswagen. And BMW, when they reported earnings, actually gave the guidance that they had to readjust down because of China and the slowdown over there. So that's why you can pick and choose.
So you're just making my point that the DAX is a good economic indicator.
Yeah, which is what Ralph said a second ago. And once again, you're talking about BMW and the car makers. These are the transportation companies. Once again, that Dow theory. How significant a sell-off are you expecting, Ralph Acampora?
Well, a couple of weeks ago, I did an in-depth study of the components, the 30 Dow stocks that make up the Dow average, and my downside from top to bottom was about 21%. It's not a disaster, folks, but it's definitely a problem. By the way,
21%, and you're saying we've already seen 7%?
Yes. Maria, we've had a bull market for 6 years, my heavens, and we haven't had a 10% correction since 2011.
Yeah, but
Come on, and no one should be surprised about this,
and
Maria.
No one should be